In this webinar replay, I'm going to show you how we research Tesla stock from scratch using Stock Simplifier. You're going to see us analyze the company's business model, moat, growth potential, risks, valuation, and more so you can understand if it's worth buying today. Let's dive in. If you don't know me, my name is Brian Feroldi. I've been buying and selling stocks for about 20 years. Here are my portfolio returns over the last 14 years or so. I have been able to beat my benchmark. I have a feeling people know me, but perhaps they don't know Justin here. Justin is our behind the scenes guru, and he is, in my opinion, an expert at AI. He put together many of the prompts that we're going to be using in here. So, Justin, how long have you been investing for?
Oh, you are too kind. I've been investing since about 2014,
Okay.
and I've actually owned Tesla since then as well. So also been very kind. And you are right. You earn your stripes owning Tesla for a long time.
You certainly do. So, why have we outperformed the market? We are big believers that research is the foundation to investing well. Research enables you to develop true conviction in the companies that you hold. That conviction enables the patience that you need to hold them, and that enables the compounding to work its magic and the wealth to be generated. Look at the long term returns for Tesla. This stock has compounded at a 44% compound annual growth rate since it IPO'd. Just incredible. But man, were there multi-year periods in here where you had to deal with some stuff. This is the drawdowns that you have endured as a long-term Tesla shareholders. Gosh, it almost looks like every other year this stock falls 50%, 50% or more. And it looks like the biggest drawdown was 2021 to 2023. What's that? 75%. So, man, do you need an iron stomach to hold on to Tesla. So this is where the research comes in. The research is what gives you conviction to buy and hold winners like this the long way. So the goal here is to research Tesla's stock from scratch. We're going to be doing so with our Stock Simplifier tool. So this is the framework that we're going to be using. 7 steps to research these companies from scratch. If you're a first time learning about Stock Simplifier, there's a full course that explains everything that we're about to do in more detail. We are going to go relatively quickly to get things moving along. There's a spreadsheet tool that we're going to use. It's kind of like a checklist. And there are these AI prompts that we are going to have. So step 1 to researching any company is to figure out which of the 6 stages of the business growth cycle the company is currently in. Justin, let's run a poll and see what stage our audience thinks this company is in. And I have a feeling that there's no wrong answers on this one here. Tesla is not going to fit into any of these categories very nicely. Now, while that's going and the poll is running, I'm just going to open up some going into Stock Simplifier. I'm going to open up some tools. So I'm going to get a fresh copy of the spreadsheet going. I'm going to open up a fresh copy of fiscal.ai. I'm going to open up the prompts, the AI prompt database, and I'm going to open up ChatGPT to help us with the analysis. ChatGPT. So got to make a copy here.
Well, an interesting thing is, Brian, is we're actually coming out in the polls so far. There is one phase that is leading the way substantially.
Excellent. Great. Love to see that. So here I am in Stock Simplifier. This is the spreadsheet tool that we talked about. I'm going to type in Tesla, TSLA, and it should come up with the name $1.4 trillion company. So we're trying to figure out which phase it's in. So what do people think?
All right, let's see here. We got more than half. Phase 4 is the
Phase 4.
overwhelming majority. Yeah.
Operating leverage phase. Okay. I see some in phase 3, some in phase 2, and some, every single phase has been checked by somebody. And I would
Yeah.
say that that is pretty fair, depending on which phase of the business that you're talking about. So, all right, well, let's ask ChatGPT, see what ChatGPT says. And I have a feeling this is going to be the hardest prompt for ChatGPT to run. So Tesla does not fit into any of these boxes neatly. So here's the prompt that we have that asks ChatGPT to figure this out. And we're going to go with Tesla, TSLA.
And you did one great thing in that prompt. You said Tesla, the full name, and you gave the ticker, which
Yep.
really helps just clarify things for the LLM engine.
Okay. Well, the LLM agrees with the crowd here. It says phase four operating leverage, although its confidence rating here is medium. All right. Why is this? So operating income was 900 million in Q2 of 2025. That figure was positive. That's true. Revenue growth. Revenue declined 12% year over year in Q2. Is that true? Looks like this is from Q2 and they reported Q3. Okay. And then
Yeah.
capital returns, there's no dividends, there's no reliable buyback disclosures for the periods. So it is suggesting phase four. Now, in phase four, the metrics to use are forward price to earnings, forward price to free cash flow. Why this fits? The company is profitable. That's true. It's demonstrated scalable margins and operating leverage. That is true, although in recent years it's heading in the opposite direction on the operating leverage perspective, and cash flow trajectories are meaningful value anchors. So Tesla is currently in a phase where its business generates positive operating income, aiming to leverage fixed costs. Positive profits indicate the model is functioning, and how to value it. Man, is this going to be a hard company to value. But I would say I'm going to agree with the crowd here and say phase four. This is a phase four. This is a phase four company. So that changes out the key metrics we're going to be looking at. And that also changes out the valuation metrics. So from that perspective, I'm going to say I agree with the crowd here. It is in phase four. Now, there are, if you know Tesla, you know that there's a whole bunch of businesses under one roof. There's the car business, which gets all the attention. There's the energy business, which is up and coming and growing fast. Then there's the chip. Then there's the robo-taxi. Then there's the Optimus. I would say Optimus is in the phase one. The chip business is in phase two. I mean, the robo-taxi business is phase two. The energy storage business is phase three, and the car business is in either phase six or phase four, depending on what is happening with the economy. So I don't think, again, there's a wrong answer here, but if you force me to choose, I would say phase four is what the company is in. Okay.
Yeah, it's hard to do when you have all of those companies under one umbrella.
Yeah, it certainly is. All right, next. What does this company do? I think people mostly know what this company does, but we're going to figure out if this is a good business or not. How frequently customers buy, can it raise prices, and what happens in a recession? So let's go to our database of prompts. Let's pull this up, the business analysis prompt. Let's run this, and I wonder how many things it's going to get right about this company, because again, there are so many moving parts available here. So this is looking up the 10K. So we'll go with Tesla, TSLA. And what does it say about Tesla, the business? Okay. What does it do? Tesla designs, manufactures, and sells electric vehicles. It develops energy generation and storage products. Its core operations include vehicle production and sales, after-tax, after-sales service, and used vehicle sales, solar energy systems, and large-scale battery deployment. What that said there, I would say is accurate, and it's probably 99% of the company's revenue. So it's, is that what Tesla, that must be what Tesla says about itself, because there's the link to the 10K right there. Okay, how does it make money? Automotive is 77 billion in 2024, so last year, 80% of total revenue. Services and others were 10 billion, 11% of total revenue, and energy generation and storage were 10 billion or 10% of revenue. Now, one thing we like to do over in fiscal is we will go here and let's pull up Tesla, because I like to see how fast each of the individual components are growing. If we click on financials, and then we click over to KPIs, the KPI number, segments and KPIs, we can actually see those numbers broken out. So we have automotive revenue, we have energy storage, and we have services revenue. So that's the components. If you click this stacked button bar right here, it'll stack them on top of each other. So the automotive business over the last 10 years is growing 35% per year, although revenue kind of peaked in 2023 at 82 billion, currently 71 billion. So over the last, well, the 10-year CAGR is 35%. Over the last 3 years, revenue has shrunk about 10 billion. Okay, the energy storage business, this is growing 99% per year. This business has doubled basically every year since they launched it. That to me is a really exciting and under-discussed part of this business. And then the services business is growing 46% per year. So they're all growing nicely over a 10-year basis, but the automotive business is going to be quite lumpy depending on what's happening in with interest rates and all that kind of stuff. All right. Who are Tesla's customers? Individual consumers buying electric vehicles, customers subscribe to their after-sales services and used vehicle purchases, commercial and utility customers, residential customers who purchase solar and battery products. I would say all of that is pretty accurate. Where does it operate? Tesla's operations are global: North America, Asia, notably China, and Europe. Specific geographic revenue percentages are not clearly broken out in the 2024 summary. All right, business dynamics. How often do customers buy? Vehicle purchases are typically one time or infrequent for each buyer. After-sales services and some subscription-type models may reoccur. Energy systems and stores may involve installation and long-term revenue streams from leasing. Justin, I bought a Tesla in 2020. I have not bought another one since. So I would say that that's fair. Do you agree?
I I'm with you. I bought mine in 2021 and I have not bought one since.
Okay. Can the company raise prices? There is evidence the company is facing pricing pressure. Vehicle incentives increased. Gross margin dipped slightly in 2024 compared to 2023. While Tesla likely has some pricing power given its brand and technology, external factors like competition, incentives, and supply chain may limit its ability to raise prices freely. I also agree with that. And then finally, what happens in a recession? Tesla's business has exposed to cyclical risks. Vehicle sales tend to decline in economic downturns. Investments in energy systems may also slow. And the slow revenue growth in 2024 signals potential demand softness. I would agree with basically all of that. So now that we know more about this company, I'm curious what people think. Do you think that this is a business that you can get extremely excited about? It's a business that you understand, but you're not that excited? Or is this a business that really confuses the heck out of you? I think we have a poll for this, don't we?
Yeah, let's see here.
Yeah, love to see. So, what do you think about Tesla, the business? Red, terrible. I'm still confused. Yellow, it's okay. Or green, it's a super interesting business. All right.
It's coming in. We got one leader. Oh,
Okay.
we'll wait a couple more moments.
Yeah. All right. So I will. Yeah, once we get to about 70% of people, that would be good. I will say this. If I had never heard of Tesla and I just read the prompt that we got, I would go with the crowd here. To me, to get quote unquote excited about Tesla, you really need to understand the things that are under the hood, and many of those were not unearthed by the AI. But what does the crowd say here?
All right, we got over 50% on possibly. The next up, absolutely, with quite a few coming in for no way.
There you go. No surprise. I know this is a very polarizing stock. Based on the existing business, I understand why people are saying it's moderate there. Ooh, I must have like moved something around. Um, I, I'll go with like I understand or yellow. although the energy business was growing quite nicely, the services business was growing quite nicely, and the car business was growing quite nicely. So I understand why people don't like this company. I understand why people are excited about this company. To me, the most exciting things were not even covered in the prompt there, because the exciting things are in the future oriented, and the prompt is largely what has the company actually done oriented.
Yeah, it's financial statements versus story of the future.
Yeah, totally. Totally. Okay. All right. If you're interested in using the tools that we have, the Stock Simplifier tools, which includes the prompts, everything like that. It's normally $199, but if you do want to purchase it and use the QR code, or Justin, if you could share the link in the chat and on YouTube, that would be really helpful. You can get it for $99 if you use the discount code that we do for these webinars. All right. Next section. So we understand the business and some of the business dynamics. What is this company's moat? Three broad categories it could be: no moat, or the moat is weakening; narrow moat, or the moat is stable; wide moat, and the moat is expanding. So red, yellow, green, which category of the moat is there? Now, there are 5 potential moat sources. There are 3 current states that the moat could be in: no moat, narrow moat, or wide moat. And then there's the direction. Which direction of the moat is there? Is it shrinking? Is it stable? Or is it widening? So, Justin, I would love to do a poll here and get people a chance to ask which moat source do you think Tesla most benefits from right now? What do you think is its primary moat source right now? Is it network effects? Is it low cost? Is it intangibles? Well, what is the primary moat source? I have a feeling that this is going to have multiple moat sources, but I'm looking for the crowd's opinion on the primary one right now.
I'm curious about this one too, because this is my favorite position, but I think I'm actually following in line with the crowd. It's spread
Well,
across everyone.
it is very spread out, but yeah, okay. If forced to choose, I'm curious what you would say.
Oh, I think it's gonna come down. Well, let me wait for a couple more people to come in. Seems like we're stalling out. All right, let me share the results. Long term, I'm thinking it's the low cost production.
Okay.
It's the factory that make or it's the product that makes the factory is the or how's he always say that? The product is the factory.
Factory is the product.
The factory is the product, yes.
I just got note that my microphone changed. Man, my microphone. Let me do it. Can you hear me okay, Justin?
Okay, now you're back.
Okay. My wire is like so sensitive for some reason. Okay, well, let's see what ChatGPT thinks. I'm gonna go and make a copy of the moat analysis, and I have a feeling, my hunch is that it's gonna make an argument that many of these are active, but I'm curious what it says are the most important ones. Um, because to me, there's moats that the company needs from both existing legacy automakers and from upstarts below it. This company needs a moat from both Ford and GM and all of them, but it also needs a moat from BYD and Xpeng and Rivian and etc. Okay, so ChatGPT says Tesla has a narrow moat, and it actually says narrowing. Okay, its primary moats are its intangible assets and its low cost production. Tesla's prestigious brand and EV manufacturing scale give it a narrow moat today, but weakening margins, gross margin fell, and increasing competitive pressure suggest the moat is narrowing. So, switching costs, not present. Tesla does not appear to benefit from high friction from customers to switch away. Although buyers may like the brand, EV ownership still allows choice amongst many alternatives, and Tesla's filings and competitor do not highlight an unusually unstrong customer lock-in or high exits. I would agree with that. It might be a little bit of a pain to switch to a different car or something like that, but I wouldn't say that like you're locked in to staying with Tesla if you're a customer. Intangible assets present. It says narrow and narrowing. Tesla benefits from strong brand recognition in EVs and technology leadership in battery and software. These intangible advantages give it some pricing power and appeal. However, increasing competitive pressure from legacy automakers and other EV entrants, along with margin erosion, suggests the durability of this advantage is under stress. Operating margin fell, net income fell 52%, and they are saying that the company's brand cachet as a auto automaker commands premium pricing, but it's under pressure. Okay. Network effect, not present. Tesla does not material benefit from classic network effects, where each new user adds value to all others. While its supercharger network and software ecosystem have elements of ecosystem advantage, they do not rise to the level of self-reinforcing network effect that locks in users and creates strong barriers to entry. Now, lots of people actually chose this. I'm guessing that the network effects that they're talking about are the supercharger network.
I would have said that for the switching costs. I would have attributed the supercharger network just because if you go to a different EV focusing specifically on the cars, I've heard from friends when they have them driving around, it's harder to find stations in comparison to the supercharger network, but that's going to the structure's being built out.
Yep. So I would say I think ChatGPT did its job here in that it's not a classic like if somebody that's a non-Tesla owner buys a Tesla, it doesn't necessarily generate the network effects from a um, supercharger network perspective. However, if people are thinking the data that Tesla gets from more cars on the network makes the algorithm for its self-driving cars faster, better, stronger, then every time a new Tesla is sold, every car benefits because it's getting increasingly smarter data. So if that's the angle you were thinking of, I would agree with that.
That might be one of the most powerful ones.
Yeah. So whether that's a classic network effect by the exact definition or not, I don't know. But if that's what you're thinking and that's why you chose that, I would say I agree with that. All right, low cost production. Tesla has scale in EV manufacturing and vertical integration, which gives it cost advantages relative to smaller competitors. Margin data shows cost pressure, automotive margin decline that suggests cost advantages are under pressure. Elon has long said that they want to be a manufacturing company first, and they want that to be their biggest kind of scale advantage. They don't have scale over they do have scale advantages over everybody else right now. And if you've seen that chart on Twitter that shows automotive losses of EV makers, and that Tesla is the only one that's generating profits while they're selling EVs. Every other automaker is generating losses, and Elon is constantly pushing on them to lower costs. I would say that in the long term, this is going to be the most important moat. Okay. And then counter positioning, it says not present. Tesla does not appear to rely on a business model that incumbents cannot replicate without self-harm. While Tesla was an early mover in EVs, many incumbents are now scaling manufacturing, and their degree might not be as so I would disagree with that. I would say that they have counter positioning against Ford, against GM, against Volkswagen, anybody that has any legacy automaker that's making ICE cars or internal combustion engine cars, and that has unions. I would say and the direct or dealerships. So if you have dealerships, if you have unions, or if you have ICE cars, I would say that Tesla is counter positioned against you.
Absolutely.
Yeah. So margins are the primary risk are margin compression due to pricing competition, the competitive landscape from traditional automakers and upstarts, valuation risk. It says narrow moat with the uncertainty being very high. So narrow moat with it being very high. I'm going to agree with that. I'll say that this is not the widest moat company out there. I would say it does have a moat, and the moat looks, I would say, narrow to me, and it looks stable. If the company can get robotaxi off the ground and it can build a network effect with robotaxi, I think that I could see the moat getting wide there. And if it really presses its advantage with the self-driving software and can license that to other EV makers, I will say this company's moat is getting wider. But for now, I would personally say narrow. Would you have any pushback against that?
No, I think it really depends upon where you're looking at it, and that's the hard part. And I've noticed a couple comments in the chat about this, and it really goes to what's on the financial sheet and what's part of the story that's coming down the pipeline.
Hmm.
If you're putting it on the story, that's what's coming down the pipeline, that's going to be completely different than if you're looking at what is currently on the balance sheet
Yep.
and what you're making money on. Those are two entirely different situations.
Yes, they are. Yeah, yes, they are. Totally. And I would guess that's going to be a big reason why the valuation, as we're going to get to in a little bit, is going to be quite disconnected, right? And this company here is going to be a bet on Elon almost more than anything. All right, moving on to growth potential. So, does this company have low growth potential, good growth potential, or great growth potential? Now, there's two ways that you can grow a company. You can get new customers, or you can get existing customers to spend more. If you're getting new customers, you got to invest in your sales and marketing. You got to open up new distribution, new markets, or to get existing customers to spend more, you got to launch new products or services or raise prices. Now, if we go to fiscal and we go to the overview section here, we can get some rough numbers. So Tesla's revenue over the last 3 years has grown at about 8% annualized. If you go 10 years, it's about 38%. Earnings over the last 10 years have grown 15%, and they've been heading in reverse negative growth over the last 3 years on a compound annual growth rate. Over the next 2 years, Wall Street expects revenue to grow 6% annually, although earnings per share are expected to grow 22% annually. Those are the numbers. Those are just the numbers that are out there from analysts and stuff. But let's dig into the story about the company's long-term potential a little bit more. Let's throw the prompt in there and let's see if ChatGPT can identify the company's true growth potential and looks at the levers hidden under the screen. So let's do Tesla TSLA and see what it says. All right. Primary growth strategy is going to be balanced, new customers and existing customers. All right. New customers, market and sales, strength, moderate. SG&A, selling, general, and administrative increased slightly year over year to 5.1 billion on a revenue base. This is a medium level of growth. What do you think, Justin? Is investing in sales and marketing a major growth avenue for this company?
Oh, for their marketing, they boldly say it. They spend no money.
Yep. Yep. So I don't think that the company is going to spend money on advertising, although they did start to experiment with some of that stuff next
Yeah.
year. Okay. Next, new distribution channels, moderate. Tesla disclosed expansion of direct sales and services infrastructure globally. I have seen renewed things on Twitter that the company just hired a new head of India. So, like opening up new markets like that, I would say that that is an area of growth for the company. Oh, maybe that's down below. Geographic and market expansion, strong. Energy generation and storage segment gross margin rose as deployments increased globally, and this is high confidence. So, yeah, opening up new markets, I would say, is definitely a strong growth avenue for the company. Acquisitions, nope, no recent large scale acquisitions. I don't want Tesla making acquisitions that are big. Bolt on acquisitions, I think, are fine. All right. Existing customer expansion, pricing power, moderate. R&D expenses increase, suggesting investment in premium innovative products, while premium pricing may apply. So pricing power, moderate. New products and services, strong. Tesla expanded its energy production power products, Megapack Powerwall. It has ramping a roadmap. AI programs, new battery tech stated in its 10K. High confidence and strength in customer retention is moderate. Deferred revenue from FSD, so getting people that haven't bought FSD to buy FSD and connectivity, that could be an area. Okay, strongest growth is new markets and new geographic expansions and new products and services, although it did not highlight Optimus. It did not highlight the AI chip. It did not highlight the cyber taxi network and stuff. Moderate strength, pricing power, customer relationship, sales and marketing, and then untapped is acquisitions. So yellow and green. I would say that this prompt did a okay job of highlighting the things that already exist. It did not do a great job of looking forward. Actually, you know what? Since we're here, I wonder what Grok would say about this same analysis.
That's a good one to look. And one thing I would suggest actually is instead of using the same chat, is opening up a new chat for a new prompt, just so you don't inject it with the old information.
In ChatGPT, you mean?
Yeah.
Okay.
And then maybe I should give a gift to everybody. If you're ever unsure and you want the model to do a little bit of a reflection, I'll put this in the chat. This is a really good prompt that I use all the time for people. And it's to really help get the model to be a little bit more accurate, because after it gave the response, it will then reflect on the response and review the information to see if it might change your mind or change its mind.
For people that aren't on the chat or don't have access to the chat or watching the replay, what is the prompt?
Okay, the prompt is, I need you to pause and reflect on your previous answer. Show me your chain of thought and your confidence in that answer. If you need to revise your answer, now is the time.
Okay. That's a good one to do. Okay, so Grok, for what it's worth, does say niche distribution channels launch robo-taxi service in Austin. Supercharging network to non-Teslas with growth there. Launch Model Y in India and APAC was up substantially. Giga Berlin. Automotive AFSP declined. New Model Y variants down the road. Yeah, I would say that between ChatGPT and Grok, Grok did a better job. Yeah, same prompt. I would say Grok did a better job on the growth one there. All right, so what do people think? Tesla growth potential: red, yellow, green. Very poor, very moderate, or really great. What do you think about Tesla's growth potential? Yeah. Mixed results again, as always. People are totally torn on this one, and I understand why. I understand why. I think it's about the time frame that you're looking at. If you forced me to choose, I would say over the next couple of years, I'm gonna say it's good at best.
Oh,
I don't think this company has, I don't think investors in this company, which I am one, have a lot to look forward to from a financial perspective over the next, let's just say, 2 years. The bet I think you're making, or that I'm making, is that 3 to 5 years from now, the new revenue sources are moving the needle. That I think that's a big part of the bet you're making from a financial perspective.
yeah, I would agree. I think the over under is 2027.
There you go.
Are things
2027.
landing before or are they landing after?
All right, what do people say?
All right. We got over 50% yellow. It's good. With second tier coming in green, it's great. And little under 10% saying red, it's low.
Okay, there we go. Moderate growth potential. Yep, I totally understand with that, and I'm with the crowd on that. If you're watching this at home and want to access Stock Simplifier, it's $99 if you use the code you see on the screen or the link in the chat that we're going to share. Next, key metrics, the key financial metrics to watch. To me, this is the best thing about Stock Simplifier is that we teach you that the metrics to look at change depending on the phase that the company is in. Now, we already previewed at the top of this that nailing down the phase for Tesla is about as hard as it gets. But broadly speaking, when a company is in phase 4, you want to look at its revenue growth rate, its free cash flow margin, its operating margin, how the company is doing versus earnings estimates, and its return on invested capital and the direction of the company's return on invested capital. So let's go. And this is the prompt, Justin, that AI struggles with the most. Do you have any insights into why this one is like the hardest for AI to get right?
let's see here. One of the challenges, okay, so for this one, it's always best to make sure you tell it the phase,
Yep.
and then it should do well. If it's not grabbing the right information, what I would suggest for people is download the most recent 10Q or 10K and upload it themselves and
Okay.
run the prompt based on the information that you upload as an attachment. It really focuses the mind of the model to help.
Yeah. Since we have Grok open here, I might as well do it on Grok too, so we can do a compare and contrast to see if one does better. All right, but let's look at ChatGPT. Okay, revenue on a 3-year compound annual growth rate. The target we're going for is over 20%. And this says for the 1-year period, 0.95%. So we're looking at the 3-year period, and this just calculated for a 1-year period. Now we know that the company's actual revenue growth rate is about 9%. So that should definitely be in the let's see, that should definitely be in the red category. Revenue growth over the last 3 years has not been impressive. It just flat out hasn't. I'm curious if Grok got that one right. Grok says 22%. Where did it get that number from? That must be from the most recent quarter. Yeah, Q3 update. All right, so both of them are kind of on the struggle bus
Yeah.
with this one. Anyway, next, operating margin in the most recent quarter, 7.2% in 2024, positive and rising, although the trend is declining. Well, let's check that one out. So it says the operating margin is 5%, but we want to know more about the trend. So financials, I'm going to close out on these. And we're going to go to the income statement to figure this out. Operating margin is right here. Operating margin is right on the income statement. And you can get the trend for it. I'm going to go to the last couple of years. So look at this. Company had an operating margin of almost 17% in 2022. But look what's happened since. The operating margin has fallen from 17%. It was on the nice ascent, and now it is heading straight down. Now, that just tells me the company is heavily investing in itself. But from a pure analysis perspective, it's not positive and stable. It's kind of cyclical. This is a it looks to be a cyclical number, and for right now, it's declining. All right, next, free cash flow margin. So this says red. It says free cash flow was positive, and the free cash flow margin was basically barely positive. So free cash flow margin is under ratios, and then it is under margins, and then it is free cash flow margin right there. So let's close out the operating margin. Free cash flow margin all over the map. We should be able to see quarterly. Yeah. Let's take a look at free cash flow margin on a quarterly basis to get a little bit more of a granulated look at it. Yeah, look at that. Do you notice a pattern other than to say this thing swings wildly? Like sometimes they're minting free cash flow. In 2024, March 2024, they actually cash flow negative. So I'm going to say this is just erratic. It is a positive figure, more positive than negative, but it is erratic. Okay, earnings versus estimates. Earnings versus estimates. Okay. Q4 shows decline in margin. It says 4 of 4 of the last beats. So we go to estimates to figure this one out. And we are specifically looking at earnings versus estimates, given that it's a phase 4 company. That's going to be EPS. You could also look at revenue, and I'd probably argue that revenue is more important than earnings per share for a company like Tesla, given where it is. But we can also, I guess we can check both since we're here. Man, my computer's going slow today. Come on. Actually, while here, let's check out what Grok said. Grok said four of the last eight have been beats. That's not a very consistent thing that we wanna see. Let me try and refresh that. I don't know why it got hung up there. All right, earnings per share. And I should be logged in to. It should have this come up, but oh, look at those revisions to earnings. Down, down. Analysts have been revising their earnings downward uh, over time. And if we look on a quarterly basis, so we look at some actual numbers here. So their estimate was 56, the actual was 50. Miss 40, meet 41.27, miss 77 and 37, miss 60 and 72. So I would say inconsistent at best. Inconsistent at best. The final thing to check is return on invested capital. Return on invested capital. We just want this figure to be positive, given the company's stage. Return on invested capital is about 18% over the last 5 years. So that's actually quite good. So quite good. So let's just say on a key metric perspective, from the numbers perspective, Tesla is not impressing. It hasn't impressed me from a pure financial perspective. All right, that was a lot. Justin, do we have any questions from people in the Q&A or anything we want to get to?
One person was asking about for Elon buying 1 million shares himself, that wouldn't be considered a buyback by the company, so it wouldn't be a capital return, correct?
Nope. Elon buying on the open market for himself, that would have nothing to do with the company and reducing the share count or anything like that. That would just be the CEO buying shares. Now, a million shares. What's the stock price? So that's a $400 million or
No,
500
$1 billion worth.
$1 billion. Sounds like a lot, doesn't it? When your
It
net
depends upon
worth
how much you're worth.
is $400 billion. Let me say that differently. Elon added 0.2% to his Tesla position. Right, $1 billion is nothing given Elon's net worth.
And you know what, Brian, actually, one person requested to see if you could add my prompt to the pause and reflect if we have the time to
Sure,
the
we can go
last
back and
one.
do that. We can go that in a little bit. Where'd you put that in the?
Put it in the chat. I'll put it in the chat once again so it's
Sure,
fresh.
I got it. Let me try it. Yeah, let's see if that improves the results anymore. So
And it is interesting while you're doing that, in the chat, I love it how half the people that are in the chat talking about Tesla are super bullish
mm-hmm.
and they're talking about all the future things coming down the pipeline. And then another half are talking about how it's all hype,
Mm-hmm.
how this is a story stock completely and it's most likely going to be overvalued and everything else. And that is the epitome of what Tesla does to investors.
And let me just say that they're both right.
Yep.
Yeah. This is a company. If there's ever a company that you could just say, I'm not comfortable with the risk. It's just too high. I don't want to take on the risk. No problem if you don't want to take on the risk of investing in this company. But I will say, what was the quote I was gonna mention? Somebody had a great quote. It was like Eddie Effelbein or something like that, and he was like, on 1% of the companies out there, on 1% of the publicly traded companies out there, you can't apply traditional valuation metrics to. You can't apply traditional analysis to it just doesn't work on them. Tesla is definitely in that 1% of companies where you could have made a very logical argument the entire time this company has been public that it's going bankrupt, that there's no way it's going to work out, and shorting it would have made sense, and you would have been very, very hurt if you did that. Okay, so I just did your analysis there. It says 9.5%. That looks a heck of a lot closer to what it was. It says 7.2%. That's a lot closer. Free cash flow margin, that was better. This was not available, and data not available. So it looks like your prompt to say do that again, improve the results. That is good to see. Okay, next, risks. Risks. I believe that all risks for a business can be boiled down to one major risk: execution risk. Do you think that what are the things that could prevent this company from achieving the results that it needs to for investors to do well? Now, in Stock Simplifier, we teach you that there are four major sub risks: concentration risk, disruption risk, outside forces risk, and competition risk. So let's do that analysis with the prompt that we have built. Do some analysis on that and see.
And let's start a new, why don't you start a new chat for this one?
New chat?
Yeah, new chat.
Okay.
Clear the context window.
Okay. What is the benefit of doing that?
So if you think about it like this, where you have a fresh conversation versus a conversation where you've been talking about many different things,
Yeah.
the model only has so much memory, and it might reflect on previous answers that if anything was wrong, it's going to pull to that previous conversation before it pulls from the new information that it's going out to search for.
Okay. Good to know. Good tip. Okay. Overall execution risk here is medium. Key risk factors are disruption and outside forces, and key mitigations are its brand, global manufacturing footprint, and vertical integration. So concentration risk, yellow. The company does not disclose a single customer representing 20% of its revenue. Focuses on mass market of automotive and energy products. Dependence on certain markets like China and regulatory credits could create hidden concentration risk. I would say I disagree. To me, this is not an issue at all. I don't view concentration risk as a big problem here at all. So I would disagree. I personally would disagree with that. Okay, disruption risk. Red. There is supply chain constraints and strategy competition risk. Well, that would be in the competition. The AV industry is undergoing rapid technological disruption, and Tesla is both a disruptor and being disrupted. Who would you say is disrupting Tesla?
I am turning my head, wondering the same thing.
The only one I would think could apply there would be BYD, because BYD does make some extremely low cost compelling electric vehicles out of China. So they're the only ones that, in my opinion, could be disrupting. Elon has said multiple times that the Chinese automakers are the most competitive in the entire world, but I don't see that as a threat as of right now. I think it could be in the future, but I don't see that. Okay, outside forces risk. Red, regulatory and policy exposure. Use of emission/EV credits, regulatory changes, that's a risk. Supply chain risk and supply chain constraint. Geopolitical, external factors risk, the relationship between the US and China. I would say that all of that does apply. Yeah, outside forces. Interest rates affect this company. The health of the consumer, especially the U.S. consumer, affects this company. So yeah, I would say outside forces impact the auto market and demand for the auto market, and many of those forces are just outside of Tesla's control. To say that's fair. Competition risk, yellow. So yellow risk, I would say this is a green. I'd say concentration isn't a risk. Disruption, I would personally put as yellow. Outside forces I would put as red, and competition I would personally put as yellow. And we talked about why it's defensive against those positions. To say nothing of Elon in general, I think is a big defense against those positions, just given how hard he works and how much he can push kind of the company to do things. But let's do a poll. What do you guys think of the execution risk here for Tesla? Red, it's high. Yellow, it's medium. Green, it's low.
It is. That's coming in. I
Yep.
notice Thomas actually said Elon's habit of over optimistically projecting launch and delivery dates doesn't do him any favors. And one little part to that much an interesting point to know is when Elon does his projections, according to him, it's whether or not it's a 50% or 60% chance of happening.
Sure.
It's not that this is going to happen,
Yeah.
it's that it might be better than a 50% chance of happening. It's good as an investor, it's good to know those things of the inside baseball for Elon, how he does those.
Yeah. I've heard him say multiple times when it comes to timelines and projections, he would rather set an unrealistically optimistic um, timeline and fall short of it than set a realistic one and hit it. Because the other way, by setting the unrealistic one, he moves faster, and the company achieves things faster than they would have otherwise. And you might disagree with that, but I, I think it works. I think it works for him. All right, what do people
Oh
say?
yeah. So all right now we're split between red and yellow.
Okay.
Most people think it's medium, and then just a few less people think it's high, and some people think it's low.
Yeah. I'm going to go red. I'm going to go with the redders here. I think the execution risk here is extremely high. There are so many things that they're betting on doing. And Elon has said that this is a extremely hard company to run. It just is. And they're betting on many future technologies. Now, I think that Elon is capable of executing probably better than anybody else. But to me, the execution risk here is very high, even though I'm perfectly comfortable with assuming that risk with Elon at the helm.
Oh yeah.
Uh, okay, final question here. By the way, if you want access to Stock Simplifier, it's 99 bucks. There's the QR code, and there is a link in the chat and on YouTube. Final one, valuation. I have a feeling that this is going to look quite interesting here. So Tesla is in the operating leverage phase. So we're going to be looking at forward price to earnings and forward price to free cash flow. You know, I'm also going to do the phase 3 ones, the price to sales and price to gross profit, because given that Tesla's earnings are all over the map. Its margins and stuff do ebb and flow. I have a feeling that even its forward price to earnings ratio might not be the best to use on this company. But let's first start by following what Stock Simplifier says, since we said it was a phase 4 company, and just say, well, what is this company's forward price to earnings ratio? There's trailing. We want closeout trailing. We're looking at forward. This is a very growth oriented company. Forward price to earnings ratio. Okay, so right here we have big ugliness that we need to exclude from the chart because it's just not helpful for us to look at it like that. Okay, so this is at least somewhat useful to us. So medium, high, low. So there was a point in 2023 when you could have bought Tesla for 30 times forward earnings. And in 2025, it was trading at 265 times forward earnings. The average here, for whatever that's worth, is 80. Currently, 221 times forward earnings. Okay, so that's forward earnings. Next, let's look at forward price to free cash flow. Price to free cash flow. See if that looks any different and we can learn anything. Free cash flow has also bounced around quite a bit. As low as 33 times free cash flow, as high as 595 times free cash flow, which is where we're at now. The average is 118 times free cash flow. So that's that. And I'm also going to look at the forward price to sales ratio here. Let's take a look at price to sales. Okay, so this company was as low as 3 times next year's sales in January of 2023. It's currently 14 times forward sales. So for every dollar in next year's sales, how much market value is there? And this might be the best metric to look at to judge Tesla's valuation, if not price to gross profit. You know, since we're here, let's just do it. Price to gross profit. Um, let's take a look at price to gross profit. Medium, high, low. A bunch of them here. So this company trades at an average of 48 times price to gross profit over the last couple years, as low as 16 times gross profit as high as 127, currently about 91 times gross profit. All right, what do people think about Tesla? Do you think Tesla's valuation today is attractive? Red is a hell no, it's overpriced. Yellow is it's a fairly valued, and green is it's a deal slash bargain. Well, we have a winner. we have
There's one
an
coming in.
yeah. We
Now,
have
the
an
the
early leader.
caveat would be over what time frame?
What? Over
The
today. Yeah,
yeah,
true.
today.
Today. Yep. Is Tesla overpriced today, based on the numbers that we've seen and everything about the company that we've seen today? All right,
I think.
pretty good audience participation. What do people say?
All right. Let me share right here. Overwhelming red.
Red.
No, it's overpriced. If
It
that's
is.
a surprise.
Yeah, I know. Like that's a surprise, right? People say Tesla is way overpriced today, in general. All right, so let's take everything that we learned together about the business, the moat, the potential, the key metrics, the risks, the valuation. Is this a stock you are interested in today? No, not at all. Yellow, yes, maybe. Depends on the price, depends on the situation. Or green, hell yeah, I'm interested in Tesla's stock today. Justin, what do you think of Tesla stock today while those numbers are coming in?
Oh, I love it.
Love it.
I love it. I'm in my core position right now. So I'm at the lowest ownership that I normally am, where that's about a 30 or 40% position for
Okay.
me.
Wow.
I'm a concentrated person. I prefer few stocks to many, but I think the next 12 to 18 months is going to be a unique scenario. Like you, after 2027, as long as they execute, then I'm incredibly bullish and I own too little right now.
Okay. That is one analysis. I personally sold about a third of my Tesla position a few weeks ago. I think the price today is very overvalued. And while it is, I think it's my number two position overall, given the risk of the valuation and the risk of the execution risk. Personally, I wanted to reduce my overall exposure to Tesla, but make no mistake, I'm still betting a sizable portion of my personal net worth on this company. So I think it's currently overvalued, and I chose to take some off the table. But I'm also selling gains that I purchased many years ago. And I just will remind you, anybody that is bullish on the stock, I understand why you're bullish. I just think it's important to look at charts like this, drawdowns. Just know, if you're going to be a holder of this stock, you have to fully expect Bitcoin levels of volatility. Essentially, look at the drawdowns of this stock over the last 15 years. Is there any company that's been harder to hold than Tesla, given the extreme levels of decline? Great, Justin. Do we have any questions that people have asked in the chat or the Q&A that we can knock out?
Oh, people are already requesting new. Someone wants you to do Adobe next, but for the most part, it's just been fun banter overall. Although
Good.
now some things are coming in. Richard wants you to explain drawdowns.
Drawdown is a decline in the stock price from a recent high. That's all that is. So drawdowns. So what this means is whenever the red line is at the top, that just means Tesla is at a all-time high. This is a new all-time high. Are we at an all-time high right now?
Very close to, yes.
Yeah. So I think the previous all-time high was 436. Yeah, Tesla stock is currently at an all-time high. So if we go to drawdown here, that just means how far below its last all-time high was it, and you can just see how volatile this stock is. So if you're buying
Well,
Tesla today, I would say expect more of this in the future. You just have to be willing to endure this.
And something to notice on that chart specifically, if you notice the peaks and valleys, they are sharp. This isn't an going up the escalator or down an escalator. This is
Yeah.
elevator up or down.
Yep.
That volatility. Tesla shareholders over the long term are a different breed.
Yes. Yep. Totally. But again, if you look at the total return, if you've held this stock, you've earned a 44% compound annual growth rate. 44% compound annual growth return. And man, have you earned it. You had to deal with this. You had to deal with this the entire way to earn it. So again, it's just a reality if you're going to be a shareholder of this company.
And just to report the results for the Are You Interested? We got an overwhelming majority in the no column with a, I don't know, a little bit less than half in the yellow for not sure and maybe, and then a little bit more than 10% in the green for yes.
You go. Yeah. Yeah.
So
Great.
as of today, it seems like people are a little shy.
Yeah, I understand. I understand why. Yeah, please in the chat if you have or on YouTube if you have companies that you want us to run this this process through, please suggest them. Where I see Spotify, I see Arista Networks, I see Adobe, I see Netflix, I see Cisco, Zoetis. I'm going to be keeping a list of these things, and then in our weekly newsletter, which you can sign up for at longtermmindset.co. We're going to do a poll, and we're going to poll our audience for what stock you want us to do this on next. But I will maintain a database of stocks out there based on suggestions that we get from the audience. One stock that I want to look at is Fiserv. FI, I think is the ticker. That company is at a multi-year low right now, and I think they just fell like 20 or 30% a couple of weeks ago. So I will put that in the voting out there to see what people think. As a friendly reminder, everything that we just discussed, if you want more details about it, why did we choose that? How do you come up with that? How do you click the buttons? If you buy Stock Simplifier, you get the full course that backs up everything that we just did. You get the spreadsheet tool that we use to kind of go through the checklist. You get all of the prompts. And as Justin here figures out more ways to be smart with AI, we're going to update these prompts and put them in there. You do get a 30-day money-back guarantee. If you choose to buy Stock Simplifier, it's a one-time payment using the link in the chat or using the link on YouTube of $99. So it's 99 bucks to do so. Well, that completes our Mag 7 series. So we now have 7 of the most popular stocks in the world done. We are going to move forward. We're going to keep doing sessions on Tuesdays, both live on YouTube and on the private Zoom channel, which many people have done so. And we do plan on doing this on many other companies in the future. So if you have suggestions for us on companies that you want us to research, please let us know. As a reminder, Tesla is about as hard as it gets. And we could see that some of those prompts were on the struggle bus. Some of the key metrics we put were definitely not analyzing the company as well as it needs to. That's because some companies are hard to analyze, others are easy. The easier the company, the more Stock Simplifier works. The harder the company, the more there is some nuance that needs to be applied to it. So please let us know what stocks that you want us to analyze from here. Well, thank you guys so much for your time and attention. I see tons of companies in the chat coming in. PayPal, Palantir, Zoetis, Lumina, Lemonade. Wow, tons of great companies to do it. Multiple things on here for Adobe. So yeah, maybe we should put that at the top of the list. That would be really cool to see.
And Brian, we did have one question coming in, and since we were doing Tesla, I think this would be a good one to answer. So, what do you think of the pay package for Elon, the proposed pay package that everybody loves talking about because it has a T instead of a B?
Yep. Personally, I'm fine with it. If he hits the targets he needs to make himself $1 trillion, then the stock like 15 X's from here or something like
Yeah,
that. Like I think
I
it has
believe
to be a
that's
$20 trillion company. So if my investment was to 15X from here because of what he did, I am perfectly okay with him getting $1 trillion from that. Yeah.
I think that when you actually look at the structure of the pay package, it's one of the most investor friendly pay packages that you would wish more CEOs would take pay packages like this because they are specifically for the investors in a way. It benefits the company from my perspective.
There you go. Leave in the comment section below, especially on YouTube, what you like, what you don't like about this. We're always open to feedback on how to make these more investor friendly. But thank you guys so much for your time and attention and for joining us here. For Justin, I'm Brian Feraldi, and we'll see you in the next one. Happy investing, everybody.